Ladies and gentlemen, it's your boy Ryan Dins for another episode, and on this episode I'm going to talk about why I personally don't day trade, particularly not day trading penny stocks. I'm going to break it down for you, so let's go. Alright, the first reason is the most obvious reason. 80% lose over the course of the first year. 80%. Actually, it was 88% in a different site. But one of them said 80%, one of them said 88%. These are people who measure the success of your average trader. And if you were to say what percentage of traders who invest in index funds make money over the course of a year, it's much higher. It's probably 90% year over year. And then if you have to look at what percentage of investors make money over the long term, probably 90% plus. All you have to do is buy index funds. The index funds are basically funds where other people do the trading for you. So instead of buying Apple, AT&T, Realty, AbbVie, you're just gonna buy an index fund that has all these in one, and then professional hedge funds are gonna do the trading for you. I believe that if you day trade, you're taking a big risk, but if you invest, it's long term, you're gonna win. Another reason is taxes. Day traders get taxed on their income brackets. So if you have a high income bracket, you could be paying 35%. That's a lot. And if you invest long term, it's called capital gains, and you have to hold it for over a year. And that tax rate, depending on your income, is between 15 and 20%. So it's a lot less. And considering the fact that a lot of day traders lose money, you know, maybe you're lucky enough to squeeze out 10% profit a year. Okay, well, you're gonna get 35% of that taxed. Now, with index funds and safe investing, which what I do, you know, you're gonna make 10% every year anyway. So it's gonna be taxed 15 to 20%. What would you rather do? Have your 10% be taxed to oblivion or pay a low amount? So that's just another reason right there. Indexes are pretty much guaranteed. If you look at the historical data from what the market's done since the 1700s, 1789 to be exact, it's going up. Like, it's just, it never stops going up. And you might say, oh, well, you know, it has crashes. Yes, during crashes, if you're an investor like me, you're just gonna buy more at a discount. You're not gonna panic, you're not gonna sell. Right now, if it goes down 20%, I'll be happy. I'll be able to get more long-term stocks for cheap. So I really don't care. Another reason day traders like it is because they get lucky a lot. And what happens is you go in this risky investment, you go, oh my God, I made $2,000 in a day. So then the next investment, you double it, trying to make $4,000 in a day, and you lose it all. It's like a roulette player that keeps throwing it on red and they think they're smart because they keep getting it right. Well, eventually it's gonna land on black. What you should be doing if you are gonna day trade is every time you have a win, you take some of that profit out, but what they do, most day traders, is they'll go bigger and bigger each time, and eventually you're gonna lose. Eventually the luck will draw out. You know, a lot of day traders right now are thinking that they're very smart because they're making a lot of money, but this is the most insane bull market we've seen. It's been going on since 2009. It's been in an uptrend. It's insane. Eventually, this is gonna crash and it's just gonna go whoop, and a lot of people are gonna see like 70% losses in a day or a week. That's what's gonna happen when this thing crashes. Where me, where I got my Apple, Microsoft, AT&T, you think those companies are gonna go anywhere because the market crashes? These little penny stocks of some random coal company in Idaho, all it needs is one crash and that company could go out of business. Most stocks don't last past 7 years. Statistically, only a few and very small percentage of stocks stand the test of time. You know, a lot of these companies are fly by night. Another reason why you don't want to get involved in penny stocks is you're not as smart as these hedge funds and these computer algorithms. Everyone thinks they're so smart, but they have computers, they have geniuses programming computer algorithms to fool you. They're always doing bear traps, they're always doing bull traps, they always have some sort of little angle to be able to take retail traders. And don't get me wrong, there are day traders making a lot more money than me, but I'm gonna make my 10 to 20% a year with no effort. I don't even put that much time and research into it because it's pretty easy. Just keep buying Apple, keep buying Microsoft, keep buying these blue chips to pay a dividend. Johnson & Johnson, AbbVie, Realty, these are stocks that are gonna continually go up like that. Whereas these risky penny stocks, this is what they do. They go, are you smart enough to time that? Some of you are. Some of you are watching this and you're going to be mad at the videos and, oh, I made all this money. What are you talking about? But you're probably in the top 5% smartest people on earth. You know, you got a lot of these people who, they're not that smart trying to do these very, very risky things, and they think they're smart because they win until they lose. I've been there. I made $5,000 in a day once, but I've also lost, you know, $2,000 in a day, like a few times. And overall, I had these huge days that I was bragging about. You think I bragged about the $2,000 loss days? No, I kept it to myself, and eventually I was down. And I look at it, and I was down after a year. The average trader that invests in day trading loses over 30% a year. That's a pretty lot. Whereas me, I'm pretty confident that I'm gonna make 10 to 20% a year over the course. You might say, oh, well, the S&P is only 10%. I think I could beat the S&P. I'm not taking huge risks, but you know, I do go for these tech stocks that have large growth. I do time the market a little bit. As much as I say buy and hold forever, you know, I'm smart about when I buy, and if I see something run up 20% a week, obviously I'm gonna sell and take some profits. I'm not just gonna hold it forever. You just gotta do your own research, figure out what's best for you. Walk before you learn to run. That's one thing I gotta say. Buy these risky stocks later when you think you're good. Play with options later when you're good. If you're a beginner trader, you should not be jumping into penny stocks just because you see your friends and people on YouTube making a killing. They're more experienced, they're smarter than you. If you've been trading and investing for a few years and you think you're really good, slowly get risky. Start going to mid caps before you start going to penny stocks. Don't just jump for the home run. I'm hitting singles all day. I'm hitting doubles all day. Eventually these singles and doubles, they lead to runs. You people just keep going for the home runs. What happens to the guy in the baseball team that tries to hit a home run every time? His batting average is 200. Eventually he hits a lot of home runs, but his batting average isn't good. I'd rather have the Kenny Lofton type player with a 350 batting average. You know? Keep hitting them singles, keep getting them runs. That's the way I play it. I'm going to be a millionaire in 10 to 20 years from this strategy. Day traders might have success, but they probably won't. So, all I'm saying is do the sure thing. Don't take unnecessary risks that you don't have to. So make sure you hit the like and subscribe button, and don't hate on me too hard if you're a successful day trader. I know some of you are doing it. I'm just saying most of you are losing money, and that's a fact. Woo!